occurrence assertion. Some key controls, as I said, would be segregation of duties, separation of duties. You, again, remember separation of duties is that there are controls in place to ensure that no one person can perpetrate and then conceal a fraud or make an error and conceal that error. Other things would be authorization of transactions. You want to see authorization of write-offs. You don't want someone to just arbitrarily be able to go in and write off an accounts receivable, because by writing off accounts receivable, you're removing an asset. So the company has lost an asset. Any kind of electronic data interchange in terms of transactions, credit checks prior to the approval for sale. So prior to processing an order, that you ensure that the customer meets the company's credit standards. Pricing, that the goods are being sold or customers are being sold at a price consistent with the company's documents, procedures. Access to assets, right? You want to make sure that you're protecting or safeguarding your assets, so people shouldn't just have, there should be controls over who has access to checks, who has access to shipping or inventory, things like that. That there are adequate documents and records, as I talked about the importance of pre-numbered documents, independent checks on performance, and that's basically that there are reconciliation procedures going on, and those reconciliation procedures are being